Welcome back. Well, today we're going to talk about two very important sectors, oil and gas and telecom, that have behaved in very different ways. We're going to track the ETFs, the exchange traded funds. We see this on a year over year basis. The telecom industry on a year over year basis is down 15%. Conversely, the oil and gas and equipment and services up 46%. That's on a year over year basis. This time this year compared to this time last year, it's a huge divergence between the two sectors. We're going to try to, figure out what we can do with this information. So oil and gas equipment and services ETF contains many stocks, including the following top 10 holdings. That includes names you may know like Halliburton, Schlumberger as well, Baker Hughes. These are very large oil and gas service companies. Conversely, the telecom ETF contains names like T-Mobile, Motorola, AT&T, Stream Networks as well. Now we can see on a month over month basis, the telecom sector is down 9%, the oil and gas equipment and services sector down 4%. Certainly, telecom, the weaker of the two sectors, is down more, even on a month over month basis. On the daily change, this updates us over the past day. Telecom down 1.2%, oil and gas up 1.8%. Now, we see here the oil and gas equipment and services sector is in red. The white line is the S&P 500. We can see, especially as of late, the oil and gas sector has outperformed the stock markets, which is it's very reminiscent of days we've seen in the past, like 2007, when oil prices were very high. Now, this is a sector that's considered to outperform the market. So when the general market goes up, let's say by 1 point, this sector may go up by more than 1 point. Conversely, we take a look at telecom in red versus the S&P 500. Telecom is one of the worst sectors out there, and it has certainly underperformed the S&P 500. In the same period of time that the S&P 500 has lost, quite a bit of ground over the past month, telecom sector even more so. Now we can compare the telecom to oil and gas equipment and services, and we can see the pattern really did begin to break down June of this year. The white line, oil and gas, continued to move higher as a red line, the telecom moved lower. Now, how do we use this information? And this is not a specific, stock recommendation. However, if we want to position our portfolios for recovery, let's say we're bullish, we think the market's going to go back up. Well, a lot of investors and traders out there would say, buy the strength. Go out there and try to find what seems to be working the best, and that buy that sector, that strong sector on weakness. Conversely, if we think the market's going to go lower, if we're bearish, if we're very negative in terms of our outlook, we may want to sell short what we think is going to go down more. Now, history being as it may, it only tells us what happened in the past. It's not a predictor of future occurrences. Certainly the telecom, which is maybe undervalued, could, have a bounce back up. Maybe oil, which was very overbought at one point, could sell off. We don't know. But if history's any judge, usually the strong stocks continue to lead the market higher, the weak stocks lead the market lower. So based on your opinion of the overall markets, a lot of investors out there may say, position yourself, to go long the strong stuff and or sell short, the weak sectors. But we're going to continue to watch these and many other sectors along the way, and we'll be sure to update you with any significant changes. We hope this has been helpful. We look forward to seeing you back soon.